Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together, generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive right in. Take a look, see what's going on today. If you want to follow me at @Finance, and if you want to join our community, finding-value.com, I dive deeper into all this stuff, looking for investment opportunities, sharing them with everyone in the community, answering your guys' questions on the weekends during Q&A sessions over Zoom calls, and giving midweek updates for individual companies that I think are good entry points. That sounds interesting to you? Definitely sign up. That coupon code special can save you 50% on the first month only on a monthly membership and a larger discount on the yearly membership. All right, so Martin Pelletier says apparently there is a business case for LNG, a very strong one indeed. Yeah, exactly. Look at the LNG exports for this is feed gas for LNG exports, lower 48 year to date. Boom, higher. And this goes ballistic all the way past 2030. It's a very big, it's like a doubling of natural gas demand for LNG exports over, no, actually, I think it's a doubling of demand of of natural gas in its entirety from where we were last year till 2030. We need to produce way more natural gas, and we've got a lot of other things that are electricity demand, like artificial intelligence, coming online at the same time. This is a lot of demand. Another one from Martin. He says, "Let me simplify. There is no cushion. Insane how the world is so confident that we won't need oil, that we've depleted our inventories and now are in the midst of taking away our surplus capacity. We better be right, otherwise we're in for a world of pain." That's oil. And natural gas goes along with oil. We're seeing rig counts drop. We're seeing fracking drop. We're seeing everything drop, and our spare capacity is getting eaten up. This is going to be one heck of a we'll call it a collision between the pullback in rigs and fracks, and then the spare capacity getting all eat up. We're gonna see oil prices jump as rigs are very low, as drilled uncompleted wells are depleted. It's gonna get real interesting coming up. I'd say in a couple of years. It could start at any second. It could have already started, and I can show you some analysis here on this. So I'm just going to show you a little bit of analysis. This is called a fractal, and this fractal exists in many different asset classes. I grabbed this one from a different commodity company, and I just overlaid the fractal on top of oil price of the last bull market to show you how well that these cycles repeat. The cycle here is how humans trade. It's a pictorial representation of the psychology that gets produced from the herd. That's what it is. This here is a cycle. Last cycle, if I were to overlay it and match, let's say, the front half of this cycle where the bottom here to the peak there would produce a move roughly of $130 a barrel. We hit approximately 146. I can also adjust the fractal sizing for the second little peak here, and that gets us real close to the peak of about $150. It's not about being precise. What it's about is understanding the rough area of where we could go. It's about understanding the psychology behind the move, that the move creates a pattern that looks similar to this, and that we've seen in history in other stuff that has traded similar chart patterns. And that's exactly what we've seen. So it doesn't mean that we'll have the perfect exit, but we can get in the general area of where a potential sell point could be, given the psychology that the herd is trading. Now, I'm using this as a projection because this fit quite well over this, and I can project what maybe the future has in store for us for oil and the next bull market. Now, if I scale this size here, I get a projection of about $490, $500 of oil price. And the time frame, if I were to kind of time this thing up, perhaps something like this, is early 2030s. And I think that aligns very well with a lot of other fractal analysis that I've performed on other sectors, other companies, and whatnot. That's what my expectation is coming up, is that we're heading into a very big bull market in commodities in general, and that oil is going to be a big mover. There's going to be a lot of money made in oil, put it that way. And a lot of people say, well, what about this fractal if I put it to something else? Okay, we'll put it, I'll give you one here. So this is Kazatomprom. I know I've got a lot of uranium followers. Here's Kazatomprom. You guys notice the fractal overlay on top of this. And I even put the wave counts on it. That's what I think is coming in Kazatomprom. Is there other setups like this in uranium? Yeah, they all have it. Almost every single one I see has this. Look how well that overlays for uranium. Now, this isn't the only thing that overlays. It overlays in everything. Dry bulk has it. Coal has it. Oil and gas has it. Energy service has it. Precious metals, they're trading a little bit different. You can fit that up a little bit differently on the charts. They're not the same as energy and some of these other sectors that I'm seeing. This isn't just one company. It's in a lot. What I'm trying to say is that the genetics of the markets, what is embedded into human psychology, what's embedded into the leverage of the companies, their balance sheets, it's all expressed through these fractals and patterns. Uh, and what I'm seeing is that it's all saying the same thing. It's not disconnected. It's not one company or another company. It's in all of them. And when people tell me, well, what's the supply demand of a particular, let's say, sector, I'm going to respond with, it's in all of them. And think about that for a second. It's not in just uranium. It's not in oil. It's not just in silver and platinum and all these other ones. It's in everything. Now, what does everything have in common? They're all being priced in dollars. That's the commonality. And that's why they're all moving together. Bullish Trend says the world is headed in an energy crisis. It's a matter of when, not if. This won't happen at once, but slowly. The level of complacency about the idea of limited resources will end badly. I think he means unlimited resources. I agree with him. It doesn't mean, even if you have unlimited resources, it doesn't mean that you can produce more flow. And that's where I think everybody gets their head not really screwed on right. We're not talking about reserves. We're not talking about resources in its entirety. We're talking about flow rates. We've increased the flow of oil at an exponential speed. Can we continue to do that? I don't know. And that's where I think there'll be a disconnect. What we need to match is we need to match the money printing that the system needs to survive, and GDP, which is more or less oil production. If they have a mismatch at some point, that's going to result in inflation. Could be massive inflation. And that's what we need to match up. I am saying that there's going to be a mismatch in the future between supply growth and money creation. If there is that gap, what we would see is we would see, well, exactly what we're seeing with the fractal moves. We would see crude oil be breaking out against patterns here, which we have, and we've got the fractal count. We would also be seeing silver and gold, which are precious metals, about to launch. Exactly what we're seeing in both of them. What this means is that our currency system and the design of it is about to run into an energy crisis. And the energy crisis is going to flip the currency upside down. It's going to flip it on its head, the design of it. And it's all kind of manifesting itself right now. So I've thought this was coming for a while. The first hit was 2008 that there was a problem. And that was the peak of conventional oil. And I think unconventional oil has delayed it. Now, is there some other things out there that could delay it further? There could be. Maybe we find some discovery in oil. Maybe. I don't think we have. Shale wasn't a discovery of oil. Shale was a technology discovery to extract it. We knew it existed. We just didn't know how to move the flow rate of it. As we get better technology, we can get the flow out of some of these harder to get areas. And I think that will help. I think we will get more flow with time for a period of time. But then you run into geological constraints. So it's really geology that's the ultimate determining factor, not technology, at the end of it, the end of all this. Indeed, we actually have a triple divergence on SIL, the ETF. If it blows through, which can happen, and we melt up on the RSI close to 100, it could mean that we see a 6x move even in the big silver miners in less than half a year, maybe even in a few months. If you have memories from the 1970s bull market, you can only grasp it once you are in it. We've got this big downtrend in SILJ. We've broken that, and now we're starting to basically melt higher. We don't have a lot of overhead resistance. That's what this volume of resistance is here. We're getting above that volume of resistance, which means there's no overhead resistance. What he's saying is that we could see a big move higher. There's a divergence that's occurring. He calls it the triple divergence is happening. I give 1 or 2 days where this all breaks out. It's like this huge release of energy just blows it to the upside. And that's happening in SIL. Now, SIL, we can also chart SILJ. SILJ is in a launching pad, in my opinion. We're about to launch out of this pattern here. And you guys have heard me talk about this a lot on the daily technical analysis updates. Here's SILJ versus silver itself. That's breaking out. That looks ridiculous. Because usually you get through these downtrends, then you start to accelerate to the upside. This could get really, really interesting. See how fast that move last bull market there? I participated in some of the companies here. I made a whole bunch of money in a very short period of time. It took about 6 months, 6, 7 months. What I did is I caught the bottom of a falling wedge, and people, if you're part of the website, you guys know how I like my falling wedges. We have another falling wedge here. You guys know how I like my falling wedges. I started taking positions before this as the companies were exhibiting bottoming patterns already in some of the companies. And again, we're up on some of them over 300% already in just a few, a year or two. This is going to be epic when this takes off. I'm hopefully we get very big moves out of those. Another thing that we can look at is SILJ divided by SIL. Saw that SIL was was kind of breaking out. You can see that we could be bottoming here, where SILJ starts to outperform SIL. There's SIL breaking out of the pattern there, starting to rip higher. We're seeing a lot of the bigger, larger silver companies really taking off. So I think the juniors are about to absolutely rip it. And during I'm recording this on Sunday in the middle of the day, and we've got a Q&A session coming up. We'll talk about some of those silver junior companies that look really good, that are all squeezed up really, really low. Basically, they're at like this point here, or maybe this point down here, somewhere like, or they're just breaking out of these patterns. So somewhere where those circles are at. If you are listening to this, obviously you're going to be listening to this on Monday. That'll be uploaded onto the website. And you guys can see that video under the Platinum question and answer section if you're looking for it. 99.99% of people who will buy silver soon don't yet know they will. Think about that for a second. The majority of people who are going to buy silver soon don't yet even know that they will right now. That's how big this could be. And I agree with that. Somebody said today, I sold all my Bitcoin for silver. Guys, it was a pleasure riding with you, but silver is the future. I don't know if that's necessarily 100% the case. No one knows with certainty. But I think it's a smart move. Yeah. And I don't know if silver's the future. It's an asset class. There's a lot of things that I think will be incredibly valuable. But I'll just say this. I think the most valuable commodity on planet Earth is oil. Oil's in everything. It's all over the place. And when you start to look at what changed the world for human beings, it was basically our ability to harness energy through equipment. And everything else is basically performing actions and functions and doing design work, create designs and use commodities and energy to create wealth. That's it. People don't, I'm just going to say this, people don't want Bitcoin. They want what Bitcoin can buy. And what I'm telling you is what Bitcoin can buy is about to get scarce. That's what I think. And oil has been the thing that has created and is in the most amount of wealth in the world. It is embedded into the wealth that we want, if that makes sense. So silver, obviously silver I think is the number 2 commodity in terms of its number of uses, not in volume, in number of uses. So it's in a lot of products. Oil is number 1. And if you break it down, I would say that oil is the most important commodity in the world. It's also probably the most mispriced. If we get a shortage of oil, I'm talking like a real big shortage, and I'm not stating that we will get a real big shortage. I'm just saying if there is, and people need to start digging holes and trenches with their hands, you'll see how valuable diesel and oil and gasoline is. It's very valuable. In terms of dollars per hour, man hours worked, I mean, you could justify ridiculous numbers for the price of a barrel of oil. Really could. Digger says, if history repeats, we could see $4,200 gold by the end of the year. In the case, silver will undoubtedly exceed all-time highs and maybe more if we look at the gold to silver ratio. So looking at the gold to silver ratio, a couple of things I want to point out here. First, I'll point out the chart, just because I'm looking at it. The chart here, that's the stair-step pattern. What happens is you get on these stairs, and you just stair-step higher. This is a bullish formation. It's a bullish chart pattern where you see the stair-step. Just wanted to point that out. And then you look at the ratios. A gold to silver ratio, if gold is at $4,200, 80 is $52 silver, 75 is $56 silver, Going down to a gold to silver ratio of 60 is $70 silver. Now, does it mean that silver will stop at 70? Doesn't mean that it will stop at 70. We could go way lower in the gold to silver ratio or way higher in the price of silver. I can't tell you when that will occur. Can't tell you how it will move necessarily. All I can say is we're in a bull market going higher. Silver is breaking through potentially a monster of a pattern. In my old videos, I would always say this: monster patterns change lives. Some people say it's life-changing gains. Others have adopted wife-changing gains. I think that is coming. We could be right at the front doorstep here, ready to break out of these big patterns here. Valuation matters little in the near term, but it's almost all that matters in the long term. I would agree. Longer term, valuation matters big time. It determines future returns. And right now, we are at ridiculously low, I should say, ridiculously high valuations, ridiculously low projected future returns is where we're located. Bjorn Lomborg says, well, I'm just going to go here. I'm not going to read that. This is expensive solar and wind. You are constantly told that solar and wind are cheap. The reality, though, the more solar and wind, the costlier it gets. That is because solar and wind are worthless when it's not sunny or windy. Data for 2023, but same results for 2019, just before the C-19 Ukraine war. There is no cheap electricity that's green. Doesn't exist. Everybody who adopts more green energy have higher prices. Why? This is exactly the data that I look at. If we implement something and those that are the furthest along of implementation of whatever they're going to try, whatever they're trying results in far higher costs to the consumers, why are we doing it? And if there's a secondary plan here, why don't they tell us what that secondary plan is? I don't think it's due to climate change. I think climate change is a made up thing for a ulterior motive. I don't know what that other motive is. Maybe it's they don't want to depend on oil producing countries. Maybe they want more self-sustaining energy production where they're not subjected to the ups and downs of oil prices. Whatever it is, whatever it is. But this data is basically saying there's no cheap green electricity that we've observed. Silver versus gold. This is another ratio chart. We've got the silver to gold ratio broke above the 200 moving average resistance, which coincides with this 1-year downtrend line. If gold can simply hold steady near current levels, conditions are ripe for a rapid compression, the silver to gold ratio, where silver outperforms gold. We've got a nice breakout here where silver could really run. Looks really good. Make gold great. 57% of the world's annual supply of silver demand was dumped in 1 hour in a failed attempt to stop last week's rally. Position now at a loss, so sad. 483 million ounces were sold within an hour on this reversal day. Failed. We kept going higher. The attempts to try to control silver are not going to work anymore. Just wait until you see a problem in the physical market. Now, this is the big question that I have, and I brought this up before. What happens? This is a big what if, because I don't know the answer here. I'm just posing the question so you guys can think about it. What happens if the paper market can't meet physical demand? Do we see a divergence between the paper price and the physical price? And what does that mean for paper markets? I'll say it one other way. If people cannot get physical delivery on a paper market, What is the paper market worth then? If they can't get the physical to back the paper market, why would you need the paper market? And could we see a divergence where silver goes up, the physical silver, and the paper markets asymptotically approach zero? Asymptotically means that it will go down, 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 down. It will never get to zero, but, or maybe it can get to zero, but the whole thing breaks where people don't believe the paper market, people stop participating in the paper market, and the paper market crashes at the same time that the physical market goes up. And I'm just posing the question. I don't know if that will exist or happen. Just stating like, what if something like that were to occur or could occur? Here's silver on the 12-month closing prices. These are 12-month, 1-year candlesticks. That look like a breakout to you. Sometimes chopping away the short-term noise cleans the signal up. Does that look bullish? That looks ridiculous to me. That looks like the cleanest cup and handle pattern I've ever seen. And we're breaking the neckline or top of that cup and handle pattern. It looks ridiculous. Howard Marks says, when I was a boy, there was a popular saying, don't just sit there, do something. But for investing, I would invert it. Don't just do something, sit there. Develop the mindset that you don't make money on what you buy and sell. You make money on what you hold. And that is completely true. And I don't believe these quotes. I know they're right. How do I know they're right? Because I've experienced them. I didn't hold long enough in a lot of my investments, and that's my major downfall. So what am I doing this bull market? Just holding. Make money in holding. And I buy when assets are down and cheap, and I'm patient and I hold. All the money's made there, guys. And the faster you realize that, the more money you'll make faster. The less you trade, the longer you hold, more money you make. And everyone wants to make money fast. So they think, their mind, I need to go out there and take a bunch of risk and I need to go trade my way to success. Except there's no one who's done that successfully. So what makes you think that you're going to be the first to really make all of this money in a very short period of time? And most people try to do it with very little experience. Global oil demand continues to grow. Global oil reserves continues to shrink. Oil decline curves continue to steepen. Guys, think about that for a second. Tell me why you think, why we're going to have unlimited amounts of oil in the future. If we are, then wouldn't our reserves be going up? Wouldn't the decline curves steady? How are we going to go up if we have reserves shrinking and decline curves are steepening? Coming down. The consequences of political rate cut agendas, money printing, and QE are emerging. You understand what's coming? Here's a warning. Debt servicing costs will soon skyrocket, and few are prepared. An equities crash and financial reset are the only ways to stop this. Otherwise, global yields will surge as bonds erode. People are prepared while the sun shines, not during the storm. Hope this helps. These are basically right underneath resistance. They're all about to break to the upside. You know what else has the same chart? Gold. Gold has the same chart as this. Very, very similar. The recent fractal here. We'll look at it just to show you what I mean. The fractal, not the size of the fractal, but the fractal itself. This move here, look at this fractal, how we come up. This fractal is a continuation pattern. That one right there that I drew in there. if you look at the yields, they all have that same fractal there on a different time frame or base. Because these are from 2023. This one here started in April of 2025. This is a continuation pattern fractal. You can see them all through there. We're going to see yields go up, not down, up. I don't care how much talk government officials say, they're going up. That's what the charts are suggesting. And that's where I'm going to end it there. So give me a thumb up for the content, guys. Subscribe to the channel. Subscribe to the website if you'd like. Use that special coupon code if you like. That's all I've got for today. So we'll catch you next time. This is Finding Value.